Since we're recording, I'm going to give a quick caveat. Nothing you hear today can be construed as compliance or legal advice. Please consult compliance counsel. Okay. So we were just talking about investment properties and how they get excluded from the main call report. There is an exception to this. There is a form when version 6 got rolled out called the SSSF, the State Specific Supplemental Form. The intention for this is that all of us who are on this call know that you have to do a bunch of state-specific reports, right, that are outside of the call report. The SSSF was intended to be the replacement for that, so you wouldn't have to do it. Not every state took NMLS up on that. So there is a form, and actually you can find it here, license requirements and fee chart. This gets updated all the time. If you are in one of these states, clicking on the link brings up the spreadsheet. So if you are in Iowa, Kansas, New Hampshire, New Jersey, Rhode Island, South Dakota, or Washington, if you've got an investment property, it doesn't show up on your call report, but it will show up on this extra thing called the SSSF. We will do it for you. As long as you mark it as an investment occupancy property and it's in one of these states, it'll flow through to the form the way that it's supposed to. Amber, I'm so glad you asked that as a first question. That's super critical, and it comes up all the time. Did that answer the question? Okay. Let's go ahead and screen share in a test environment so that you guys can see what we're looking at here whenever it comes in. John, I just saw your pop up. Do you have a question? Okay. Before we get into the report itself, we're going to start with your company settings. So this is going to be for the company admins that are on this call. So I'm in a test environment. This isn't real loan data, as Harish likes to say. Before I start trying to do this thing, I'm going to start here, company settings under licenses. And you can see that I've got a bunch of different state licenses, and I've got them listed as either banker, broker, or both. What you need to do before you get started trying to sort through this data is compare this to your MU1 in the NMLS, okay? This has no impact on your subscription if you're on pro or banker or anything like that. We need to know what kind of license you have because this is going to impact what kind of data comes out. What happens when we talk to a lot of users is this is a very common conversation. I'm working as a broker. I've just started my broker shop. I'm 100% originating all my loans via broker. Great. One day I might go ahead and get a mini core or a warehouse line or start doing non-del. So to save time later on, I'm going to go ahead and get lending activity on my MU1. At that point, the state doesn't know that you're not originating as a lender. So they will ask you for Section 2 and a bunch of extra stuff related to being a lender. We can't export the correct data unless you do this first. So job number 1, get this stuff in, okay? Job number 2 is I'm going to go to report. So I'm going to pause for a second. Does anybody have a question related to state licensing and how that works? Great.
I put something in the chat. Can you hear me?
Yeah, I sure can. I'm reading it right now. So this is excellent. I'm so glad you brought this up. The answer is no. Used to be we had to do this. So if you had Oklahoma was kind of famous for this, where they would
they filed they took me to court over it.
Yeah. Yeah, you can throw a rock through NMLS and probably hit somebody who gets hit by this, where you had somebody with zero production and they were technically licensed. That Washington or Oklahoma was real bad about it. So one of the things that happened, and we used to do it. So if you go in, and you guys are on point today, so not literally. So if I go to call reports and I go into the 2023 data, yeah, we'll zero fill for all your licensed LOs that had no production. Version 6 did away with that. So 2024 moving forward, you no longer have to do that. They deprecated that requirement.
Did somebody tell Oklahoma?
But that includes Oklahoma. Yeah, this is actually throughout. And if you don't believe me, it actually is all contained within this user guide where they talk about it. Further,
so I don't have to go in and put zeros manually anymore?
Not anymore. No, they did away with it.
Thank
And
you.
I'll further prove it. So if you don't believe me, you can actually take it from NMLS. I'm going to put this into the chat so you guys can see this. This is a self-led course by NMLS, by CSBS, the guys who run it, and they talk about this explicitly. So if you've never done a call report before, because this is new to a lot of people, right? This is actually a really good course for you to also use just in call reports in general and how do they work. I know there's a lot of compliance questions that kind of come out as a result of sitting in on this. That came up specifically because we were part of the test group that helped develop the FAQs, and this got included. So, Brad, I'm glad you asked that because that's a really good question. Okay. So now I've gone through my company settings. I figured out that investment doesn't need to get included. I've got all my MU1 matching my licensing. I'm in good shape. Here's the next thing that I want everybody to take a look at. Okay. And this is going to get a little detailed.
Pull that up for you. Which one?
Hey, Teresa, you have a question? Oh, okay.
Sorry.
Sorry, Nathan, I just muted you.
It's all right. I deserved it. Here's all the states under reports, call reports. Here's all the states in which I'm licensed. This is pulling from that admin settings that we were just looking at. Okay. You're going to also see this little gear icon next to each one of these states. And you can see right now that it includes pre-approvals and includes credit orders. What do I want to determine as the definition of an application under my call reports? So this is the part where I have to defer a little bit and say, hey, look, check with compliance counsel, your compliance advisor, right? However, most of our users, when we talk to them, if we talk about the average broker or non-Del model, is not doing a pre-approval as we are considering it under the call report. So this is going to take a little bit of explanation, okay? Most of us, when we say pre-approval, we're talking to a customer. Maybe we send them the link to the app. They fill in some bank statements. They give us some documents. We run it through AUS. We run their credit, and we fire them back a letter saying, yeah, they're pre-approved. That's not the definition of pre-approved as HMDA defines it. And when you talk about, do I include pre-approvals in my call reports? Okay, that's coming through. When I talk about pre-approvals under my call report, pre-approvals are included, but it meets the HMDA definition. HMDA defines a pre-approval as I have taken a full application, I have submitted it to an underwriter, and received a credit decision from the underwriter prior to the borrower obtaining or selecting a property. Most of us are doing pre-quals. We're not doing pre-approvals as I just described it. If that is not your business model, you're going to want to have these unchecked on your icons. This is going to get a lot of TBDs out of your pipeline. This is going to get a lot of files that are pre-quals out of your pipeline. You're going to be reporting on a much smaller cohort of loans. A, it's easier to clean. And B, again, if you go to the training session that NMLS held, so this isn't coming from me, this is coming from the regulators, pre-qualifications do not go onto an MCR. If you're issuing a pre-qual, you do not need to report it on your call report. So if that is your box, this is what you're going to want to have unchecked on any state in which you're reporting against, okay? We also do have some users, this is their interpretation, that anytime a credit report is run, that counts the same as a call report full pre-approval. If that's your interpretation, you're going to leave this checked. Most of our user base in our discussions are going to leave both of these boxes unchecked. This is going to reduce a lot of the fluff that is in your call report, makes it easier to track, and is more compliant with what NMLS is expecting. So if you do some TBDs, but also just pre-quals, good question. My suggestion for most of that is that if you're going to have a true TBD underwrite, it's going to be a lot more easier to manage if you leave this unchecked. And then I'll show you how you can do an override using the TRID dates in the file. So Steve, I'm going to pick on you for just a little bit because you've thrown out an excellent use case. Okay.
Sounds
All
good.
right. We're all used to it, right? That's how our day goes. So I've now unchecked these. I've determined that I'm going to do a whole lot of pre-approvals. I'm mostly a pre-qual guy. So I've unchecked this in all my gear icons. Now I need to go test that data. Let's go take a look at a couple loans. How do I know if something's going to get included or not? Well, let's go open this up. We're going to do all loans. And let me go pick something out of processing, maybe. Good old Ken customer. We love Ken. Under audits and dates, this is the place where you can check all that information. So if I see here all of my dates that are in a file, most of us should be used to this. You've maybe ignored this little orange indicator that says MCR. So if I make it to a pre-approval / pre-qual status and pre-approval is set to yes, this is my application date under the MCR. If I have it off, it's going to use that date, MCR date. If I have credit import date or credit order date, it's going to include this. If I have it turned off, it's going to default to the TRID date. So that way, only the TRID date is going to populate as an application, and my pre-quals / pre-approvals would not show up. Now, Steve still got a great question, though. What do I do if I do a couple of these? Well, one thing you could do to make sure that it populates in is that if you're taking a TBD, and I'm on my loan and property tab, and I've got it listed as a address as a TBD, right? I'm not going to change this file. I still have the ability as an administrator to enter the TRID date. So what I might consider in your situation, which is a very good question, I would keep it as a TBD for tracking and address and accuracy purposes. But I would enter that pre-approval with a TRID date in order to separate it from my pre-quals. And then when I really do receive 6 pieces of information, I would update it again so that it populates an accurate date into the TRID date.
I have a question about the TRID date. So what date is that referring to? Like the moment the borrower signs the document or the moment you pull a credit report?
Yeah, so TRID date's going to be based on, and this kind of gets tossed around a bunch. It's the 6 pieces of information. So this is the borrower's name, income, social security number, address sought, estimated property value. Sometimes the nomenclature gets a little confused because we do have some loans that are not TRID, right? HELOCs are exempt from TRID. Reverse mortgages are exempt from TRID. DSCR is technically TRID exempt. So we use that and kind of toss around the term a lot because it's what people are used to. TRID is a lot easier to fit in there than the 6 pieces of information under RESPA. But if you look again at the definitions under the application date used is the date on the initial 1003. That's usually going to be not the date the borrower signs. It's going to be the date in which they provided it to you. So, and this is a good question, right? What happens if a borrower fills in your link, goes to your link, fills in all the data, you send them disclosures, and then they never sign? That's still an application. They gave you a lot of data. So we're going to be basing it on the date in which that is all filled in. You'll notice that most when you're filling in an application, you get the little pop-up saying, I've attested that I've got all 6 pieces of data. That's what's going to populate your TRID date. So does that answer the question?
Yes, that answers it. Because if they don't have a property at all, they're still shopping for a house. That doesn't apply until
Correct.
they find the property.
Yeah, and look, those pre-quals, I mean, you might talk to a borrower, they go out house shopping, they can't find anything. Now, there isn't, because this is compliance, I need to give one caveat to this pre-qual statement, okay? And this one started a firestorm yesterday, so I'm going to do my best. There's an exception because it's compliance. There's an exception to everything, right? If you do a pre-qual and it doesn't go anywhere, like what you just described now, that's not TRID reportable. Let's give an alternate scenario. What happens if you deny a pre-qual? So I didn't take 6 pieces of information. The borrower never gave me a property. I don't have an estimated value. It's half an application. I'm talking to somebody pre-qualing them, and I run their credit, and their credit score is 400. Multiple delinquencies, multiple current 90-day lates. There's nothing I can do. And I tell that borrower, I can't do your loan. You are denying the file. A pre-qual with an adverse action. So if you give a notice under a COA, it's 1002.9, talking about notices. If I deny a borrower for a pre-qual, that does get reported on your MCR. What happens is if you've got it to the so I'll explain how the system functions, okay? If you have made it to the pre-approval / pre-qual status, even though you've got TRID dates are the only dates that are reporting, but you deny the file, not withdrawn, denied, it will still report through as an application, and it'll also have an adverse action on the same day because that is what NMLS wants to show. So it makes sure that it all balances the way that it's supposed to. But if you deny a pre-qual to say, I will not do your loan, not closed for incompleteness, not withdrawn, but denied, that will show up, even though it's a pre-qual, which is a good point. Chuck also had a really good point that I wanted to show everybody. As we're kind of working through these, go back to call reports. Yeah, we're kind of jumping around a little bit. Connie's got a question. What is the correct moment to disposition a loan application that only made it to prospect that a credit was run? It was pre-approved, but the borrower never moved forward. So my application shows on my MCR, even when the credit was run this May, but the loan was never done. Okay. So good question. And I have to defer just a little bit because, again, I'm not in a position to give compliance advice. Generally speaking, when I was doing the job, is I would always try to hit up my teams weekly. Is this loan moving forward? And if the answer is no, clear it out of the pipeline right away. So in your instance, right, we're using this as an example. Credit was run in May. It's now November. This borrower was probably not moving forward. So two things you could do is one, you could disposition it right now, and you can either show it as withdrawn, canceled, closed for incompleteness, whatever the case may be. And it'll show as an action right now. So it carried from May, which is second quarter, into this quarter, out again, and then it'll show as dispositioned in fourth quarter. You could do it that way. The other thing you could do, and people get hesitant about this, I'm going to explain. The other thing you could do is if you want to go back and exclude pre-approvals for prior quarters, I really shouldn't have been reporting these things. You could uncheck these boxes and then refile quarter one, quarter two, quarter three. People get a little hesitant about refiling. I'm here to tell you, I have refiled just about every call report I have ever done. It's not a black mark against you to have to refile. Related to that, one other thing that I want everybody to take away from this particular call. Call reports are due in 9 days, okay? Do not be late. If you're still trying to tease together some stuff, you need a little information, you're trying to get the numbers to work, I 100% get it. Do not file late. If you need to file with some errors and then go back after the deadline and refile to make corrections, that is vastly preferable to filing after the filing deadline. If you look at Reg G and Reg H, which manage the call report, there is a timeliness requirement. There is not an accuracy requirement. You do need to get it close and you do need to get it right. However, you will also see people on their NMLS who have been hit for filing after the filing deadline. Do not do it. So between getting it 100% bang on versus getting it in prior to the 15th, I would get it in on time. The other thing to keep in mind is that you know who else is filing call reports right now? Everyone. So right now, the NMLS site is very bogged down. It tends to fail sometimes. So don't wait until the night of the 13th trying to get this in, and all of a sudden I can't upload the guy, right? So Connie, I know that's kind of a long-winded answer, but in short answer, you can disposition it right now. I like to disposition stuff right away. There is also a Reg B requirement that you have to, once a borrower applies, everybody's kind of familiar with the notice of incompleteness. Once a borrower gives you an application, you as a covered entity under a COA have 30 days to get them a credit decision. You need to tell them if they can do their loan or not. So I use that as a means to actively manage pipelines whenever I'm working on that. But I'm glad you brought that up. Oh, yeah. Don had a question regarding how do you do it. So you just uncheck these boxes. And the next time you run it, it will remember your settings and you will never have to check those boxes again.
The credit report switch is a personal preference option, or is there like a guidance as far as compliance goes?
So it's related to compliance. It's related to should you not. And unfortunately, we're a software company, so I have to kind of caveat my answers a little bit. Most of our users leave these boxes unchecked. This comes under the definition of an application under the guide here. So I recommend if you haven't done it yet, bookmark this page. It's in the chat. And the definition of an application can be found here. If it is your interpretation that the definition of an application is every time you run credit, it meets this standard, that would be your take on it. Again, I apologize. I can't act as a
No,
lawyer.
I understand. I understand it.
Yeah.
We have to go based on the guidelines and I guess make the determination ourselves.
Sure. Vanessa actually had a really good question too. Can you explain the difference between archiving versus adversing? Yes, I can. So if you have a loan that is sitting in the archive, it is not reportable. Anything that is sitting in your archive does not go into your MCR, does not go into your pipeline reports. It doesn't get exported in revenue reports. So what is the difference between an archived loan and an adverse loan? So adverse loans are loans that you do want to show up on a pipeline, on a log, showing that you've done something with them. So if you think about a call report in general, and we'll get into this in just a second in consideration of everybody's time. Once a borrower takes an application with you, I need to tell everybody what happened. What the call report really gets down to is, hey, Mr. and Mrs. Broker, how many applications did you take? And of those applications you take, what happened to them? Where did they go? And so really what you're doing is making sure that every time you take an application, it's been put somewhere. So if a loan doesn't make it to the finish line and it's an application, then what happened? Did it get dispositioned? Those loans that had something happen to them are adverse, right? Could be withdrawn, closed for incompleteness, denied, right? Anything that is sitting in adverse is something that you need to tell a regulator that you had an application that did not finish. Archive is intended for everything that I don't report. So common examples might be like a duplicate loan. The borrower applied on the link twice, and now I've got two applications from the same borrower. I'm going to archive one of them because it doesn't make sense to have two. I've got a duplicate record. If I'm doing Ken customer, I'm not going to really report that to the regulator. So test files are a good example of something that I might archive, right? If I've got a number of aged prequals and I've made the determination that I'm not going to report against prequals, I might put that into the archive so I've still got a written record of it. But if I've actually told a borrower no, or the borrower has told me no, they withdrawn their app, I need to report that. I'm not going to put that into the archive. Also related to that, because Vanessa, you've got a really good point here. For the administrators who are on this, for the admin controls, there's a reason why we put in restrictions that prevent loans from a certain milestone from being adverse, from being archived. So do not allow archiving if credit's been run. Do not allow archiving if TRID has been triggered. There's a reason why we set that up so that you can't accidentally archive a file that you need to do something with. So Vanessa's got a great question there. Cameron, can we talk about withdrawing some of these back burner files versus letting them hang out on the system? To a degree, yeah. I mean, look, if you've got a bunch of back burner files hanging out in your system, I would do something with them. I would tell you when I was a compliance officer, probably 40% of my day was pipeline cleanup and making sure the numbers match. So what you don't want to have happen is a bunch of applications where credits expired a long time ago, and especially if you've got an application date. Remember, Reg B states that if a borrower applies with you, you need to get back with them with a decision in 30 days. It's federal law. If that's the case, either archive them because they don't meet the definition of an application, or clean them out. You have to get back to this borrower and let them know definitively that something has happened. Okay, we've got some more. Chuck's got a good question, just real quick. How do we disposition a loan? Pretty simple. So I'm going to take Ken customer here, and on the right side, adverse loan. It's going to walk you through a smart system. It's going to allow you to notify everybody. When you do it, it's going to let you fill in what happened. So it'll track that for later. All of this stuff does come through and allows you to, it does speak to the call report as you fill it in.
You would suggest each LO do this on their own files?
Well, check with your company because everybody's a little bit different. For a lot of us that are like 1-2-man shops, yeah. I mean, generally speaking, the managers and the loan officers are doing their pipeline updates. Some of the bigger shops, there is literally a person dedicated to doing nothing but cleaning up the pipeline like this. Cameron, what happens from a compliance perspective when we convert to a lead? So I can tell you that leads do not show up in the call report. So if you've got a loan and you convert it back to a lead, then it will not appear on any of the reports. What happens if you get ghosted by a client before finishing the application? Generally speaking, that's going to be a pre-qual, which is not something that's going to be listed on the MCR. Okay. Also, and I know this came up yesterday and in prior calls, Tara put in a couple of good support articles regarding the MCR fields, so you can know what is the bare minimum I need to get this thing done, right? How many fields do I really need in order to get this thing to issue correctly? It's in that article, so you can see it. Okay. I think we've got everything. So let's get back to the reports. Let's take a pause and just kind of take a second. At this point, we have gone through our licensing, compared it to our MU1 and NMLS, so make sure we're issuing the right report. We've gone and checked all the boxes here to make sure that it matches our interpretation of pre-approval versus pre-qual, and if we're going to include credit reports or not. We've also gone into individual loans and checked it versus the MCR date to make sure that these are the loans that I think should be in there. We're in pretty good shape. Now, this isn't going to be the case for everybody who's on here, but I've got, I don't know, 24 states, maybe a dozen states listed on here. That's kind of intimidating, especially if I'm doing this for the very first time, like we mentioned in some of the chats. Let's just pick one. And you have the ability to issue a single call report at a time. If you've never done this before, don't try to bite off the whole thing at once. Don't eat a whole sandwich in one bite. Take bite-sized bits, okay? So I'm going to run California because I know I've got data in here. What happens when you run your call report is it's kind of like balancing your checkbook, right? You've got money coming in, you've got expenses going out. Something has to happen between the two so that they agree with each other, you hope, right? And if you've got something that doesn't quite match, then you might need to look into it. Specific questions we are asking now, is there someone we can call, email outside of these webinars? So Cameron's got a good question, and I know we were kind of talking about this a little bit yesterday. There are a number of compliance consultants that support ARIVE users. We talk to them constantly. We're constantly on the phone. Biggest recommendation that I can make, we're not officially allowed to endorse anybody. But if you go to the Facebook group for ARIVE brokers, I need a compliance consultant. Is there somebody we can talk to about compliance advice? Yeah, there's a number of them that are actually very active in the space. We're just not permitted to endorse anybody specifically, but if you put out some names, you're going to see the same names come up over and over again. So what we've done so far is we've cleaned up all of our settings. And now the next piece that we need to do is I need to balance this thing. So AC 110, you see this number is huge, right? This is all the TRID date was filled in prior to the start of the quarter. So remember, the quarter started July 1st through September 30th. So this is everybody who took a 1003 with me prior to July 1st and still has an application hanging out as of the start of the quarter. So for example, if I had June 30th, somebody takes an application with me for 300,000, and then I don't do anything with it until the next month, this is going to be a count of 1 for $300,000, right? This number is going to be an aggregate of all that stuff coming in from a prior quarter. And if I'm not sure what's listed in this number, I can also click this button, the number off to the left, and it's going to give me a list of all the 10 customers that I've talked to, and I can export that so that I can check against it later to go, wait a minute, I don't know why this ASAP prod sanity is on here. That's not correct. And I have the ability to go back and do a check on those. Now, those are all the loans from the prior quarter. I took some new applications this quarter. Here's where they're going to show up. Of these, some got denied. I had one borrower withdraw. I had one where they closed for incompleteness. And so I've got a total application of 899 loans that need to get something done with them. Now, I did close some loans too. So I've got 9 loans for $2.5 million. And if I need to check, against my accounting software, I think I closed 10 loans. Here's the 9 loans that are showing as reporting. And then I'm also going to have the same thing happen again. So I took a bunch of loans throughout the quarter. I didn't close all of them. Some of them are going to flow through to the next one. So if I took a 1003 in September and I close them in October, that is going to show as carry out, which is going to match the carry in for Q4. So this piece and this piece balance between Q1, 2, 3, 4, and then 1 again. Heads up, this is a gotcha moment. So for some states are more fastidious about this than others. I will tell you that all the states that are on NMLS have software that we do not have access to, where they can check this stuff in your system at a glance. If carryout of 891 for 582 million does not match the input of the next quarter, it is the easiest gotcha moment in the world for the regulator to go, this is wrong. What else is wrong? So if you do nothing else, make sure that your carryover between each quarter balances. And if it doesn't balance, you probably want to consider refiling a prior quarter. Yeah, Peter, to your question, yeah, I do these calls every quarter. We do these every 3 months. Absolutely. We also do record prior ones. Okay, so now I've got these 9 loans. I closed 9 loans, great. A couple fell out. I got a couple applications that are still in process, but I now got 9 loans. I need to tell everybody what happened. That's going to be where your closed loan data. Tara, I do believe we are recording this, so yes, we will be able to publish a recording. Okay. Of the 9 loans that I closed, tell me about them. What happened? Well, one was conventional. I've got a 4-family dwelling. This one was in the brokered column. So these are the loans I closed via the broker channel. And then I've got 8 loans that I closed via non-del. Tell me about them. What's the deal? Well, some of these are 1 to 4 family. Some were for purchase versus refinance. I got some HELOCs that are subordinate liens. Just a heads up, because this did come up on the last question, last session. Yes, HELOCs are reportable. Yes, they do show up on section 1. This comes down to the definition because this is not obvious. HELOCs do report, but they are listed as a conventional loan on the call report, which surprises some people. And that goes down to the definition of a conventional loan, which is anything that is not government is considered conventional. So non-QM, HELOCs are all considered, HE loans, the fixed seconds, are all considered conventional loans, even if that's not how we talk about them. And that is going to show up on this section. Broker fees. This was a big storm yesterday. For your broker, the brokers anybody who's originating via broker, this is pretty easy. The amount of your compensation, what's showing up on your block A as either your lender paid or your broker paid, this goes in here. How much did you make? This is your fee. For my non-Dells who are on the call, this is going to be your entire block A. For every borrower that you closed, what did they pay in fees to the lender? That's what we're trying to answer with this. So that's going to include your discount. That's going to include your processing, third-party processing, lender processing, tax service, if you put it in block A, is all going to be listed in that section. What we're trying to answer is, how much did you collect in fees divided by this number of loans, okay? Which is not exactly the same as your compensation. We're going to get to that in a second. There is a second section for reverses. So if you do a reverse versus a forward mortgage, they get their own piece. This one is actually going away. Heckam Saver is going away next year. That's not going to exist on the next section, next version. And then you also have at the bottom of the loans you closed, how many were QM, not QM, or not subject to QM. So HELOCs and reverses are not subject to qualified mortgage rules. They show up as not subject to. FHA, Fannie, Freddie all show up as QM. And if you are closing anything where you mark it as alternative documentation, DSCR, alt doc, or if you just put it as the non-QM file type, that will automatically calculate for you. Ari's got a great question. Heckams, how do you make sure we're placing the correct section within file? You can actually do that when you pick the loan type. So under loan and property, and I'm not going to do it because it's going to kick us out of this file right now. But if you go to, it says conventional, FHA, VA, there's a section now for reverse. We added this a couple quarters back. If you put it in as reverse mortgage, it will now let you put in whether it's a Heckam or whether it's a proprietary one, and it will automatically put it into the correct section for you. We support that now. We did that about 6 months back. We didn't make it a big thing of it, but it's there. You can see it now. Okay. So if I'm a broker, I'm done. That's all I got to do. I take in my income, you know, my intake of loans, how many applications I took. Some of them fell out. Mark those up too. And then for the loans that are left, if I went through that checklist that Tara sent over, I'm finished. That's all I have to do. There is also one other thing that shows up for you on the revenue data, which is AC 1100. This is going to be your total compensation for all the brokered loans that you closed. That's it. That's all you have to do. If I'm looking at this and maybe I've got something in my accounting software where that number's not quite right, you do have the ability to edit any one of these numbers. That was actually 15. Before I export it, I can make manual adjustments without having to go back in and fix every individual file. One other thing that I meant to show you that I didn't, so let's get back to that real quick. Somebody mentioned yesterday, and it's a good point, what you start with is not necessarily what you finish with. So the loan for the 1003 that you took is not necessarily the loan that ends up at the table, right? I'm sure that's never happened to anybody on this call. Changes of circumstances happen kind of a lot, right? Let's pretend for just a moment that I took an application for $300,000 and we had to drop the purchase price because of some inspection issues, and they closed a loan at $270,000. So I've got an application up here for $300,000, but then I've got a closed loan down here for $270,000. How do I get those to balance? Well, we also will do that for you. This is calculated with the net changes. Decreases should be reflected as negative. As loans go up or down throughout the life cycle of the loan, we're going to be managing this for you on your behalf. It's taken by calculating what the value was at the time of TRID date and how much the loan changed by the value at TRID date versus the value at its disposition date. So either when it was denied or funded. And that it is editable, by the way. I'll show you after we get done with this piece. Okay. So if I'm a broker, I'm finished. I've cleaned up all my data. Everything balances for the loans that closed. I've got enough detail to tell the regulator what kind of loan that I closed, and it's done. I'm actually finished. If I'm a non-del, I have an extra thing I have to do. This used to be something. What if it's an URL? Would that be the same? Yep. So an URL is going to show up on your closed loan data as a VA guaranteed, and it's going to show up as refinancing, first lien position. Yeah. And QM, it's a QM loan. So yes, if you've got an URL, it's going to get counted basically as a VA refinance. Okay. For my non-dels, you've got a little extra stuff to do. This used to be something that you only had to do if you were a Fannie Freddie direct shop, and then they gave it to everybody. Lucky us. There is now a section called Section 2. Everything I just described is Section 1. That's what my brokers and non-dels are used to doing up until 2024. For now, for those 9 loans that I closed, I got to do some more slicing and dicing. Okay, you closed a bunch of FHA loans. What kind? Were they fixed? Were they ARM? For the conventional loans, were they fixed? Were they ARM? For the non-QM, for the jumbo, were they jumbo, fixed, ARM? How were they funded? Now, everybody that's hearing my voice right now is a retail shop. So you are talking to the customer. You are the originator. Table funded and wholesale broker is designed for the investors that are buying these loans. Everybody who's working with an NMLS and working with borrowers directly is retail. Was it a fixed? Was it an ARM? Was it a jumbo? Was it not? Again, as long as you get good data in, good data out, we will calculate these fields for you. There is one, and most of this is self-explanatory. Everybody knows what a prepay is. And if it was a refi, Karima, to use your example, if it was a refi rate term, a VA URL is going to show up here, right? Versus a cash out, going to show up here. There's one gotcha on the screen. Do I have any non-dels who are on the call right now? Couple? Okay. Here's your heads up. All the way at the bottom. And there's a bunch of people who ignore this field at their own peril. These last 2 fields, I-450, I-460. This is your gotcha moment. You see how I've got an average days on the warehouse line. So how long did it take me to sell these loans on the secondary market? Regulators use tools to track whether this number is going up, going down, or staying the same. If you were going from 2 days on the warehouse line, it's pretty good, right? If all of a sudden it's 10, 20, 30, 50, that is a sign of fiscal health and loan quality health that the regulators pay attention to. So you want to make sure that your I-450 is very accurate, meaning that it reflects what you want to have. Now, the good news is we calculate this for you, and I'm going to show you how in a second. The other thing that you want to pay really good attention to on your warehouse reports is this number. You can see that I've got 32 loans that have been sitting on my line for longer than 3 months. That sounds kind of concerning, doesn't it? The regulators think about it the same way. So if you have a very astute state, this can be one of those fields that can trigger for an examination maybe sooner than you anticipated. Because if you have a bunch of loans sitting on your line that you can't sell, that's maybe an indication of origination quality and your ability to move loans quickly. Uh-oh, what do I do about it? So for my non-dels who are on this call, I'm going to take a pause. Let's go take a look. Yes, I'm going to confirm. Make sure that you are using the funding and revenue tab, because the best way to get accurate information into the call report is with the funding and revenue screen. So and by the way, people do this in a bunch of different ways on ARIVE. I'm just showing you how our system functions. A lot of people will use this as via their accounting software. Cameron's got a good question. I will address that next. The answer is yes. Did I grab a broker file? I grabbed a broker file. Let me try to grab a non-del. Apologies. When you fill in the date funded, we make an assumption that it is also hitting your warehouse line at the same time. Okay. When you hit the purchase advice date received, It is also going to fill in information. And we use that to calculate when the purchase advice is received. So if I originated this on 10/22 and I bought it off the line, 11/5 minus 10/22 is a certain number of days. That's how we can calculate your average warehouse dwell times on your behalf without having to worry about managing to it manually. Are there guides for the revenue reports in ARIVE? Yeah. Terry, could you do me a favor and grab the revenue support article? I can grab it in just a second
No,
too.
I could do it. Thanks.
Cameron, real quick while we're grabbing that, in answer to your question, we are actually subject to examination the same as any other lender under the laws of Maryland. So we can be examined the same as any other lender or vendor partner. Maryland passed a bill last year that allows their examinations to hit us. Yes. We are also subject under DFS 500 in New York. And we regularly go things like security examinations like SOC 2. And I will tell you that every integrated lender that you see in our system also has an opinion about how we conduct our business. So counterparty examinations are something that we are very, very comfortable with. So yeah, we get examined kind of a lot. Good question though. Okay, so if you are a non-Del, one of the things that we've noticed that is very helpful is that if you're not using the revenue reports, you're going to get better information related to your call reports and your revenue data if this piece is filled in. So after you receive a purchase advice, to fill in the purchase advice information and use that to balance against your MCR. What that'll do is it's going to fill in AC 1100, which is your revenue screen. So let me go back to that for just a second. So revenue for your non-Dels, this is going to be all the fees you charged up front, plus all of the SRP that you made on the back. And it's going to take those two and bring them in together to show this. Don's got a question. Is the revenue on a brokered loans a manual entry by us, or does it carry from the lender we brokered to automatically? So it's going to depend on who you brokered it to. For the lenders that are, I don't believe right now that we have any reverse lenders that are integrated with the system. So I would recommend putting that into the revenue screen manually, to punch it in either on the review fee screen or to put it into the review how much the broker check was. Oh, your data in ARIVE for your files? No, that's not how that works. So we are the repository under most state privacy acts. No, that would require a subpoena. So no, we do not have regulators that come in and audit your data through us on your behalf. That's not something that occurs. Okay. Again, let's take a pause because we're kind of hitting the top of the hour a little bit, right? I've gone into my settings and made sure that what is on my MU1 matches my licensing. I've gone into the select specifications and checked my pre-qual versus pre-approval and whether or not I want to include credit orders. I've gone into each individual files and I've determined if I need to update any dates using that orange MCR indicator. I've got some investment properties. So if I go into, let me see if I've got one. South Dakota. If I've got some investment properties, they're going to show up on that state-specific supplemental form. And there's none in here because I don't have anything from South Dakota. Jocelyn, yes, I will get that in just a second. I've then made some manual entries. Turns out I've got one in here that didn't report the way it needed to, so I made some changes. And then I'm ready to export. So what'll happen next is you're going to do, I recommend doing this twice. So you're going to export as an Excel. And maybe I'll just do South Dakota. And I'm going to export that because I like to keep a record of what I'm sending because it makes it easier to audit for my own purposes. And then I'm going to export as an XML. This is going to create what's called an XML file. And this is what a call report reads. This is the machine language that a call report's going to use to upload. And then I'm going to go into NMLS, log in, and it's going to fill in all those fields for me. We spend an inordinate amount of time reading these things. We're getting pretty good at it. So Jocelyn had a question, so I want to get back to this. So under loans, grab the Ken Customer Junior that I just did. Once you make it to a funded status, oops. Yeah, let me just grab a new one. Once I get to a funded status, you're going to go into the funding and revenue tab. And then once you receive a purchase advice, it's called today's date. And this is where I can take my purchase advice and read from the top down and then fill in my warehouse dwell times, my revenue calculation, my fees. And I can also calculate LO comp if I want to, based on the comp plan. That's kind of a big topic, so there's more that we need to kind of show there, but there's the 50-foot view. One last thing that I want to show you guys, and I apologize, this is kind of a wide-ranging topic, right? There's two different things, and this is going to be kind of a firestorm. Under audits and dates, there's two more screens that I want to show you. Two more fields, I should say. For your test loans, you also have the ability to exclude from the MCR. So if I'm making a Bob borrower and I'm using it just for calculation purposes, I don't want to actually include that. You can exclude a la carte individual loans from the MCR. So if you do that, you're going to have to explain why. It's going to have you put in a reason code. This is also a reportable field. If exclude from MCR equals yes, you can actually pull that up in your pipeline reports. So if you got one loan that's not showing up and you don't know why, you can add this to your pipeline reports and find the loan actually very quickly. There's one other one that we haven't really talked about, and I hope this never happens to you. This is a funded loan that I have successfully sold and passed off to my investor as a non-bill or broker. Uh-oh, I have to buy it back. You also are required on the MCR to note for all repurchases. So if I've got a $300,000 loan that I closed back in February and I successfully sold it in March, and all of a sudden November 5th, I think this is Windsor comes back and said, we found some things on this loan that we would not have purchased this loan had we known these things. You will then have to buy that loan back. Even though you closed it back in the first quarter, you have to report it as a repurchase in this case, the fourth quarter. We will track against that information. So all you have to do is go back into the audits and dates for this particular loan that was originated and put in your repurchase date. What date did you buy it back? How much did it cost you? And as a post-closing support, put in why. This will automatically pull through to your MCR. I want to be really kind of clear, though, because the definition of repurchase isn't always real obvious. This is not an EPO. This is not an early payoff, or I sold the loan and then the borrower refinanced 2 months later and I had to disgorge my commission. That's not that situation. This is where I have successfully sold it all the way and then asked to buy the whole loan back because that loan is still existing out there. So there's a difference. Kind of an unusual thing. I hope it's not something that ever happens to you, but it is something that we do support because it's an integral piece of the report. With that, we have 2 minutes left in the hour, and you've been listening to me talk for 60 minutes straight. So I'm going to pause. Last questions? Anything you guys want to know that we can cover really quick? Yeah, everybody 100% understands call reports, 100%. Cool.
I challenge everyone. Someone stump Nathan. I haven't seen it yet.
Well, and important thing, we are here to support you. So one of the things that I want you to take away from this is that first off, you're doing things the right way and that you're here trying to learn about it. bookmark the thing that we put into the chat. Tara sent over a bunch of really helpful links. Don't be late. Make sure that you're getting this thing filed on time. If I have questions, oh man, I think I got it from the webinar, but man, I don't know now. What do I do? support@arrive.com. So we've got a team of subject matter experts who have been there, done that, got the t-shirt, have seen all this stuff. And look, Abhishek is a great guy. We talk all the time. When I get stuck, he's the guy I call. We talk all the time. So if you go to support@arrive.com and say, I have MCR questions, I'm taking them. The whole team's taking them. We recognize that this is something that is a distraction sometimes from your business. And we want to get you back to taking loans from customers because that's the part that's more enjoyable than balancing MCRs. So fastest way to get in touch, support@arrive.com is going to be your method on there. Kazmir's got a question. Can you repeat the quick steps, a quick follow through? Hang on. Quick follow through of all we need to do and what's submitted and what we look out for. So licensing on your company settings, then compare it to your MU1, and then make sure that all these gear icons match what you're expecting is number 2. Take one state at a time. Don't try to do all the states together. Take one that you can then issue an XML, upload it, and then you can do the next one, upload it individually. If you're feeling real confident, you can do all of them together. And you also have the ability to edit all of them together. Investment properties don't show up on the MCR. They go into a special form called the SSSF, which you will see in the states that require it. And yes, we're going to post the recording on YouTube as well. We're a little bit over time, so I want to thank everybody for taking an hour out of your day. I know this is a lot. I know for those of you who have never done one of these before, it's drinking through the fire hose. We want to see you succeed. There is a timeliness requirement, not necessarily an accuracy requirement, so don't wait, because right now everybody's trying to jam their stuff in. Make sure you are not the one at midnight trying to get this shoehorned in. So we got your back, and support at Arrive. If you got any follow-ups, we're going to get a recording out to everybody. So I hope this was helpful, and thank you everybody for taking the time.
Thanks, Nathan. I appreciate it. And we will return to our normal Ask Arrive sessions on Friday at 3 o'clock Eastern time. Thanks, Nathan.
Thanks, guys.